The world jolted as headlines blared. Saudi Arabia finalizes landmark oil deal with China, priced in yuan. For decades, oil was priced exclusively in US dollars, the backbone of American financial dominance. But on September 8, 2025, that certainty cracked. In a quiet Riyadh boardroom, a new era began. This wasn't just a business deal, it was a geopolitical earthquake. The world's largest oil exporter was now pivoting toward its biggest customer, China. The ripple effects were immediate. The UAE entered advanced talks for similar yuan contracts, and Iran prepared to make its yuan oil sales official policy. A coordinated shift was underway, not with armies, but with contracts and currency swaps. The move signaled a new Middle Eastern confidence, no longer content to let the West dictate its economic fate. The US had long guaranteed Gulf security in exchange for dollar supremacy. Now, China was stepping in, offering investment, technology, and partnership without Western strings attached. This was more than money. It was about shifting allegiances and untangling decades-old alliances. China wasn't just buying oil, it was buying influence. The petrodollar's foundation was no longer unshakable. The West watched as a new dawn broke over the desert, casting long shadows toward Washington. The hypothetical had become reality. The global order was being rewritten, one contract at a time. The world would never be the same. China's energy appetite is colossal, fueling its factories and 1.4 billion people. As the world's top oil importer, China's leaders see energy security as national security. Relying on US-dominated, dollar-priced markets was a vulnerability Beijing was determined to fix. Enter the Gulf's oil giants, Saudi Arabia, UAE, Iran, once pillars of the US-led order, now drifting east. China's approach? Deep investment, infrastructure, and long-term partnerships. No lectures, just business. For Gulf states seeking to diversify, China is the ideal investor and model. These deals aren't just about oil, they're redrawing the world's financial and political map. The energy routes and money flows of the future now point from Washington to Beijing. China's Middle East strategy goes far beyond oil. Billions flow into ports, railways, 5G networks, and smart cities, embedding China in the region's future. Projects like Saudi Arabia's NEOM rely on Chinese tech and construction, creating deep interdependence. Chinese banks set up shop in Dubai and Riyadh, enabling direct yuan trade and bypassing the dollar. This financial infrastructure is the backbone of the new oil deals. By building a parallel system, China offers an alternative to Western finance, appealing to nations wary of US sanctions. The result, a new sphere of influence with China as the indispensable partner. Middle Eastern nations get capital and leverage, China gains energy security and global clout. It's a marriage of convenience with world-changing consequences. The balance of power is shifting, one investment at a time. The US dollar's power rests on the petrodollar system, oil priced in dollars, creating global demand for the currency. This exorbitant privilege let America print money, finance deficits, and wield sanctions as a weapon. But if oil producers accept yuan, global demand for dollars drops. Central banks may diversify, selling dollars for yuan, euros, or gold. The dollar's value would face new pressure. For Americans, that means pricier imports and higher interest rates. The Gulf's move to yuan oil sales is a direct challenge to US financial dominance. Each barrel sold in yuan chips away at the dollar's supremacy. This isn't an overnight collapse, but it's the biggest threat to the dollar in half a century. The world is building an alternative system, one less dependent on Washington. The petrodollar era is under siege. The consequences will be global. The unraveling of the petrodollar is more than a financial headache, it's a seismic shift in global power. For decades, the US set the rules, backed by dollar dominance and military might. Now, as Gulf nations pivot east, old alliances are fraying. Countries once loyal to Washington are hedging, playing the US and China against each other. The world is becoming multipolar, complex, unpredictable, and less Western-centric. A weaker dollar means less US leverage, militarily and economically. Sanctions lose their sting if oil trades in other currencies. The West can no longer assume the world will play by its rules. Power is shifting from the Atlantic to the Pacific. The new oil deals are just the beginning. The West must adapt or risk being left behind. Today's headlines are the result of years of secret diplomacy and back-channel deals. China and Middle Eastern leaders forged this new coalition in private, away from Western eyes. The Shanghai Cooperation Organization became a platform for rivals like Saudi Arabia and Iran to unite, brokered by China and Russia. Multi-decade energy contracts, military tech transfers, and joint ventures are reshaping the region. This alliance is built on mutual need and a shared desire to escape Western dominance. What began as whispers is now a full-blown realignment, catching the West off guard. Two forces accelerate this shift: Iran's comeback and China's Belt and Road Initiative. Isolated by sanctions, Iran turned to China, selling oil in yuan and forging a deep partnership. Now, with sanctions easing, Iran is a key player in China's grand strategy. The Belt and Road is a modern Silk Road: ports, pipelines, and digital highways connecting Asia, Europe, and Africa. Iran is the linchpin, with a $400 billion partnership integrating its economy into China's orbit. This creates a land-based energy corridor, bypassing US-controlled choke points. The new Silk Road trades in oil, data, and influence, redrawing the world's economic map. This isn't just a financial shift, it's a historic pivot of global power from west to east. For centuries, the West wrote the rules and controlled the capital. Now, China leads in production, consumption, and investment. Middle Eastern nations are aligning with the future's powerhouse, not out of betrayal but pragmatism. The world is becoming multipolar with new centers of power rising. The US will remain strong, but must now compete and compromise. Instability may rise as the old order resists, but a more balanced system could emerge. Every aspect of life, trade, alliances, governance, will be transformed. The era of unchallenged Western supremacy is ending. The great rebalancing is underway. The US dollar's reign faces its greatest challenge yet. The petrodollar's breach shows oil can be traded in other currencies, setting a powerful precedent. As the need for dollars wanes, trust in the currency may erode. Nations holding trillions in reserves must reconsider their bets. The yuan, backed by China's economic might and oil deals, is now a credible alternative. The future may be a multi-currency world, no single nation holding all the cards. US leverage will shrink, global competition will intensify. The story of oil, money, and power is far from over. The world is watching and preparing for a new financial order. The dollar's almighty status is no longer guaranteed,